Bruce, you must have something really good too.
Of course I do. It's Bruce Danielson, and I guess I'm here to entertain you too.
Good afternoon, everybody. Welcome to the Tuesday, April 21st informational meeting. And we will get things started, call the meeting to order, and start with any city council open discussion. Councilors, Councilor Staley.
Tom, could you? I have a request today. Tom's going to put some.
Is your mic on?
Yes. Can you not hear me?
Okay, maybe I was just, yeah, I'm fine.
Can you hear me now?
There you go, better.
Okay. So I have a request. I'm putting out a suggestion, a request, a plea for assistance to our mayor and our park department. This morning, I looked out and saw the park department pulling in front of my neighbor's house. And of course, it's that time of the year when we have Project Trim happening. You can see that there were some branches there on the bottom towards the street there that needed to come off. And it got me to thinking about the $1 million that we've already put forth to help renters with their concerns in the Sioux Falls 1 fund. And it got me thinking about in city employees that may not be doing their normal jobs, and we may have some extra manpower available. And if you ought to go to another slide, Tom. And it got me thinking about, do we have another one? That wasn't one of my slides. Although those are the codes that they use when they're doing Project Trim. Tom, do we have the photos?
They're not coming up.
Give me okay, we saw that one already. Okay, keep going. That's, I believe, the same one. Okay, that is also the same one. So I got to thinking that I wanted to put out a plea, because it's just those bottom branches that needed to come off, that either we could maybe just put this aside until this COVID thing has passed, or that we could utilize some city resources and maybe take care of this, because I know coming up with $200 to $300 for tree trimming at this point could be a hardship for many of our residents. And so, yeah, I think this is all the same picture. I had a few more different angles, but I'm just putting that out. So just something to think about, again, because we have got allocated $1 million to help our citizens who are in need of rental assistance. This would be citizens who could possibly need some assistance with this tree trimming. I don't think it's an emergency that these trees are trimmed right now. And we could put that off until the summer and take that there we go. Okay, we had it for, and then we could take that off their plate of concern. So just to put that out there. Okay, thank you.
Okay, thanks. Anybody else for open discussion? Anybody on the phones? Okay, if not, we'll move into our presentations for the day. We'll start with our March 2020 financials. Director Pritchett, he will be presenting from our downstairs conference room, and folks, you'll be seeing a little bit more of this as we go forward here with directors and city staff. We're trying to create a few more seats for citizens, as we've got chairs in Carnegie in that spaced appropriately for social distancing. So, Director Pritchett, whenever you're ready. bear with us out there if we have a technical difficulty or two working through our new systems.
Sean, we can see yours.
We're getting closer. He's trying to talk, we can't hear him.
Can you hear me?
We could hear you.
Hello? You can hear me? Okay. All right. Sorry. This is why I'm going to be the guinea pig here. Try to iron out the kinks.
So
All right. Hopefully you can still hear me. All right.
If you could share your screen,
So
Sean.
share your screen, Sean. Should be. Can you see it now?
Not yet.
Not yet.
There we go.
Here we go. All right. Hopefully you can hear me now. Sean Pritchett with Director of Finance. So I'm presenting the March financial report. This is the first monthly financial report that we will have for the year 2020. A couple of weeks ago, as you'll recall, we did the 2019 annual report, annual financial report for the city. So this, as I said, this is the first one that we'll see. And certainly things are changing quite readily here. And so this will be information through March, but it will not include much of the effects that we would expect to be seeing in regard to the pandemic issues with revenues and decreases with revenues in that regard, changes in unemployment. So just bear in mind that this is previous to that. The first slide you're going to see, and it's similar to what you've seen in the past, is our unemployment. This is through February, so unemployment was at 3.2% in February. This is down slightly from 3.4% the prior month. And the city maintained an average unemployment rate of about 2.5% in 2019. And it is to be expected that this will probably increase dramatically starting in March and going into the April numbers for the next several monthly reports that we'll be presenting. We saw a slight increase in the labor force and employment in February over January. In general, our labor force and employment has continued to grow at about 2% annually over the last 4 to 5 years. As far as our inflation rate, inflation decreased in March to 1.5% compared to 2.3% in February. This was driven in large part by a decrease in the energy sector. As you can see there, it was at a negative 5.7%, and these numbers were as of March. Building permit values, there's certainly a mixed story here. Overall, we had $103.7 million in building permit valuations through March 2020. March 2020 is very comparable for the first 3 months of the year of what we saw in March 2018. And if you recall, that year was a record year for the city of Sioux Falls. So we are presently through March had been tracking with that. It's a little bit behind where we were last year at this time, but there is some variation that occurs from year to year. New residential values are up from the previous year through March 2020. They are up about 21% through from March of 2018, and they're up over 56% over the first quarter of last year. This increase is driven primarily by townhome units, but also by single-family units as well, and we'll talk about that a little bit further on the next slide. New commercial values overall are down from previous years through March of 2020. They're down about 35% from what they were through March of 2018. And they're down about 48% from where they were through March of 2019. This is largely due to being down in the manufacturing multifamily housing and other commercial sectors, and that other commercial sectors includes things like strip malls, hotels, and restaurants. But we were actually up in the sector related to office, institutional, and educational through the first quarter of this year. This slide shows you, and I kind of lean toward some of the things that you see here. First is you see a fairly significant decline in multifamily housing that has been permitted through the first quarter of the year. This can be highly variable, and so you may see this change in certain respects with the April numbers that will be forthcoming. As far as the single family, as I said in the previous slide, you can see single family residential housing is up. It's up over where it was the last 2 years, and it's up nearly 50% from where we were last year in terms of number of permits. And townhome units, number of townhome units that have been permitted is up nearly to 94% over where we were last year. So on the positive side, we're seeing some pretty significant increases in regard to that. And I could tell you from April, we're still seeing a significant number of plats that are coming forward that are being reviewed as well. So that hasn't changed significantly from the early indications for April. As far as sales tax receipts, the first quarter of the year came in very strong. We haven't reviewed the first 3 months of the year, so on a month-by-month basis over 2019, we were up 7.7% in January. We were up 6.9% through February, and we were up 6% in the month of March, month over month to the prior year. What that is translated to is an increase in our rolling average sales tax receipts. It increased from 6.6% at the end of last year to 6.8% presently. Again, I have to reiterate the fact that these numbers would not reflect changes to the economy as a result of the COVID pandemic. The numbers that we have for March relate to February sales that would have occurred in the community and by residents of the community. And so the March numbers would not reflect some of the changes that we saw in the latter part of March and into April as a result of some of those changes in the economic climate. On the entertainment tax side, this is more variable, but the story is very similar in respect that the first quarter of this year came in fairly strong. You can see on a month-by-month basis over 2019 that we saw entertainment taxes grow by 5.3% in January, 3.4% in February, and 8.4% in March. The 12-month rolling average for entertainment taxes has stayed steady since the end of last year, staying at 6.1%. So have stayed fairly strong for the first quarter of this year. As far as our revenues to date, for the city of Sioux Falls through the first 3 months this year, we have collected approximately 16% of our budgeted revenues. This is very consistent on a proportional basis to what we've seen in the prior 3 years. So we consistently have brought in 16 to 17% of our expected revenues in the first quarter of the year. So no material changes there. Most of the revenues were consistent and in line with our expectations for the first quarter. The one change that we did see is we do collect most of the bank franchise fees or taxes in the first quarter of the year, and these were up 233% from what we had budgeted. They came in at about $2.3 million, and we had budgeted for them to be about $1 million, so about $1.3 million over our original expectation. On the entertainment tax side, this is more variable, but the story is very similar in respect that the first quarter of this year came in fairly strong. You can see on a month-by-month basis over 2019 that we saw entertainment taxes grow by 5.3% in January, 3.4% in February, and 8.4% in March. The March numbers would not reflect some of the changes that we saw in the latter part of March and into April as a result of some of those changes in the economic climate. On the entertainment tax side, On the expenditure side, again, we were very consistent in terms of the proportion of our budget. We're 25% through the year, and we have expended approximately 21% of our budget. That is very, as I said, consistent with the prior years, as you can see here. Most of the departments were within expectations. I would say the one more significant change that you might see is if you look at highways and streets, you will see that we're significantly down in terms of expenditures for that department through March. The driving reason for this is snow removal. Our snow removal expenses through the first quarter of last year were $6.2 million. Through the first quarter of this year, they were $4.4 million, so approximately $1.6 million less than last year. And this is trailing behind our 3-year average too. It's very similar to what we saw in 2018, but if you recall back to 2018, we had a very snow-heavy month in the month of April, and the expectations are that we would have a repeat of this year. So on a positive side, we are seeing some good things happening in terms of the expenditures related to the snow removal side. As far as the forward outlook, I don't want to repeat. We went into a lot of depth when we gave the annual presentation in terms of some of the things that we are expecting. But I do want to continue to reiterate that we're following both the national and local statistics of what is occurring relative to the economy. Certainly, increased unemployment is expected. There is 22 million nationally who filed for unemployment in the last month. And on a local level over the last week, more than 20,000 within South Dakota alone. We do see a lot of market volatility occurring. If you look at the equity markets, for example, one statistic that I saw that I thought was particularly interesting was that between the 11 years starting in 2009 through 2019, for that 11-year period, there was only 21 days that the stock market increased or decreased by more than 4%. So 21 times in 11 years. That has occurred this year already 16 times in only 74 days. So you are seeing a lot of unpredictability in the markets that is more consistent with what we saw in 2018 or 2008, excuse me. And then certainly that was the onset of the recessionary period. Having that, or I guess considering that, volatility and uncertainty make it hard to accurately project revenues as we await further data come in. The need for social distancing makes it difficult to project more discretionary quality of life services that the city tends to provide, particularly during the summer months. So we do lean on our ability to adapt as these circumstances change, and the better prepared we are versus we need to be better prepared to adapt versus relying on what might be unpredictable data that we're receiving. We will know more about the sales tax revenues starting in a couple of weeks. In a couple of weeks, we will start seeing the March sales tax data coming in that we receive in April, and we'll be able to ascertain from that, I guess, a partial month of the impact of the COVID pandemic on the local economy and how that has impacted our sales tax revenue. Our first full month, we really will not see until the very beginning of June. That's when we will actually see the revenues coming in from the April sales taxes that were generated within the local economy. So we do have to stay tuned, and we're recognizing that and, again, preparing to adapt based on what those revenues may be coming in at. We've seen some national retail sales figures that show on a national basis in March, retail sales were down about 8.7%. They certainly varied by sector, and not to be unexpected, you saw an increase of about 27% in terms of like food stores, but you also saw a decrease of over 50% in apparel stores. And these did align quite a bit with kind of some of the initial analysis that we had looked at earlier on, but we'll be continuing to track these, again, particularly once we actually have our sales tax receipts from the city and that data is available from the state. I want to talk a little bit about the pandemic response from our city in terms of from a financial perspective. I talked to you about the sales tax implications and timing. So again, we're awaiting additional details as to what that actual impact will be when the data is received. If you refer back to the presentation that I made on April 7th as part of the end of year presentation, we walked you through 3 of our largest funds for the city, those being the general fund, the Sales and Use Tax Capital Program Fund, as well as the Entertainment Tax Fund. And what we talked about at that time is we were preparing to buffer against expected decreases in sales taxes. And we talked about how we were looking at what the impact of a 10% sales tax reduction would be for our general fund, which funds our general operating expenses for the city, looking at a 10% reduction and hedging against what that might look like, knowing that we also have other capacities within the general fund, those being the reserve funds, but also we have, we get about half the money coming into the general fund is property taxes, and that tends to be more consistent than the sales taxes during volatile economic periods. We talked about how we were buffering against 20% reductions for the capital fund because it relies so predominantly on that second penny sales tax. And we talked about how we were buffering against 30% reductions for the entertainment tax fund because of the more decreased amount of the goods and services that are taxed by the entertainment sales taxes. It's focused primarily on areas or sectors or industries that have been hit the hardest as a result of the pandemic. I want to talk a little bit about identification of budget and expenditure flexibility. So we're continuing to review information as it becomes available, and we need to be able to continue to be flexible and to adapt as that data becomes available, and recognizing even the changes that we're seeing from the pandemic itself as to how long it will last and when we begin a more of a recovery period. I'd say as far as the general fund, as we look at that, we certainly have a goal in mind in trying to retain that policy of a 25% reserve balance at the end of the year. And so we're looking at what the implications are from a revenue and expenditure side in order to retain that. Our staff in the finance department have already been working with departments to project where those budget expenditures will be through the end of the year. That's something that we typically would not start doing until June, but have started a couple of months early in order to have better awareness of what the current expenditures are and what areas of smart spending would be in order to make sure that we are expending funds in the most appropriate manner given what's happening with the local economy. On the capital fund side, as we talked about a couple of weeks ago, we have set aside $11 million in capital projects that will, as we continue to reassess the sales tax revenues. That's in addition to $3 million of other sources within the Sales and Use Tax Fund or capital program to hedge against a 20% reduction of sales taxes. We continue to meet with the Director of Public Works, the Director of Parks, with Finance, and with staff from the Mayor's office on a weekly basis. We review the bids and make sure from a timing perspective in releasing some of those funds, what that looks like. But we haven't at this time released the funds from the $11 million that we kind of set aside for now. And we'll continue to hold from that and won't be bid until it's determined based on the sales tax revenues that's something that's going to be something that we can accommodate. We are looking at the entertainment tax fund in the same manner. We have set aside over $3 million in potential projects that were part of the capital program for this year for the entertainment tax, both on the capital and on the R&M side. And we'll continue to monitor that in order to buffer against potential 30% annualized reduction of sales taxes for that fund. We will also continue to be monitoring COVID-19 related expenditures by the city. So certainly we have seen some expenses that we have had, whether it's related to PPE or protective equipment, hand sanitizer, masks, thermometers, and other things that have been impacted to us in terms of our operations. Those numbers are probably in terms of expenditures of a couple $100,000 at this time. We are tracking that separately because there will be availability of tapping into FEMA-related funds to reimburse up to 75% or more of those expenditures. So we continue to track those on a separate basis as well. You'll see the third bullet point there is programs and service adjustments. And we're continuing to review programs and services and those adjustments to reflect the limitations of social distancing. And we're continuing to adapt as our external factors adapt as well. Back in March, from a staffing perspective, we deactivated a number of part-time employees. This was related primarily to facility closures as a result of the COVID epidemic, whether that was part-time employees, whether it was for the libraries, community centers, or Midco Aquatic Center. So it just made sense. Obviously, we weren't going to be employing lifeguards or part-time staffing to manage the Midco Aquatic Center during this time period. And so those are savings that we'll have during the term that these facilities are closed. We also are holding off on seasonal hiring for most seasonal employees. It is typical for Parks Department to actually hire upwards of 500 or more seasonal employees to assist with the Parks Department. We've held off on that as we continue to assess the economic environment, and instead are working to reprogramming existing staff, full-time staff from other departments to assist and help fill those gaps for Parks and Recreation at this time. And we'll continue to assess those services and programs for this summer as that information becomes available. We also continue to review filling of full-time positions that are not imminently critical to maintaining the core services of the city at this time, and only moving forward with certain positions that are deemed critical to supporting those essential operations. We do have a goal of retaining our workforce. We have not moved forward with furloughing employees at this time, and to the greatest extent possible, because we do have a huge need to fill gaps that we usually would have filled with part-time or seasonal employees, in addition to the fact that we have to prepare for the potential that if we have a significant number of employees that are out due to related to being sick or being related to being sick with coronavirus or being quarantined, we need to make sure that we are filling those gaps to maintain those essential services, and we're doing that through realignment of existing employees. The last piece I'll leave you with, and this is something that we discussed last week as well, is this concept of what I term leaning into the economic recovery. We talked about the fact a couple of weeks ago that we don't want to take too defensive of a position. That would only serve to burden the economic impact on the local economy as it currently is. That is, the city, we have the opportunity to make sure that we are taking the appropriate and right-sized approach as we continue to have more data available, that we know the overall impact, and that we have the opportunity to be proactive and making sure that we can assist in normalizing and bringing back our business and economic climate as quickly as possible. With that, I'm happy to answer any additional questions that you have.
Okay, thank you, Director Pritchett. We'll go to questions. Councilor Staley?
Yes, Director Pritchett. Let me just say, I'd much rather have you standing in front of us. I understand the situation. It's much easier to hear you when you're up here. Yesterday, we heard our mayor addressing the downtown Rotary, and the video is up on the Sioux Falls Politics page, and I think as well if anyone wants to watch that. But he told them at the time that you were having discussions about cutting our budget by 10. He told them that this could likely affect quality of life projects such as a hit to the bike trails, the bike street expansion. He talked about being affected or repair to the streets, and he did say that he is committed to servicing the police departments and our utilities. I was kind of surprised to hear him tell that group the 10 to 20% possibility when we hadn't heard anything about that on the council.
First, I would say I would prefer to be up there speaking with you as well. This is a little unique for me, but it did give an opportunity to see how this works for the source. In regard to your question on the mayor's comments, I think the mayor's comments were reflecting the discussions that we had with where we are looking at what the impacts are of reduction of sales tax revenues, whether it be on a 10% basis for the general fund, 20% for the capital fund, entertainment tax fund. We have set aside some capital projects, and some of those could be in terms of work that would be done on the trails, or it might, for example, one of the road projects that you had appropriated funds for from the surplus capital funds from last year was asphalt overlay of that area from Western Avenue to Minnesota Avenue. That is one of the projects that we have set aside. aside at this time, was not originally included in the capital program this year by supplemental appropriation, but is currently being set aside as we continue to assess where the sales tax revenues will be. So in that context, taking a look at those opportunities for where we can hold back spending as a financially responsible thing to do.
So another question that was a concern about the parking situation downtown. They had several leased parking spots that they were up and running, and now it's not. And I got from the email that perhaps they think it's not going to, that they're not going to be needing these spots anymore, get to be released from the lease. And they were told that they had to go higher up than the parking department. Do you have any idea? Can you help us understand how that looks? Does it come to the council, or how would that be evaluated?
I'm familiar with the exact conversation, since I wasn't there, between might have occurred with a particular individual. What I can tell you, Counselor, is that most are month-to-month basis. And so anybody who is leasing from us within one of our parking ramps is certainly free to exercise their option month basis. Typically, we would request 30 days notice of that occurring, but that has been something that's waived presently. So anybody that has been reaching out to lease, they have been, and that's just because they are all month.
Thank you. Okay, and then the last, if I could ask one more question. We all know, I think Councilor Kiley, you said maybe 300 emails mixed into this are these financial questions with all these COVID. Another constituent said, in light of the furloughing and laying off of the hospitals, and we've got seems to be coming across the board, and I did reach out to you last night with this question, but once again, would we have a plan to furlough our, is there anything in place to address that? Or would we plan?
So presently, that's not a consideration that's being brought forward, primarily from the fact that we have not moved forward with hiring of part-time employees. But those part-time employees, many of them provided critical services during the summer. Mowing of the parks and so forth, things that will have to continue to be done. I think there will be an expectation of our community, especially as the weather becomes nicer like it is today, that they do have an opportunity to go out to parks, and I think we have a responsibility of our city to facilitate that to the greatest extent possible. And the way that we're able to do that is through realignment of our present staffing. Furloughs is a challenge. It's a challenge to those individuals personally, but not so much that. Or in addition to that, I should say, it's a challenge for the city because we do have staffing needs, and we do have the opportunity to realign that staffing to meet those gaps that we have.
So if I could just make a suggestion, because I know I've talked with a lot of teachers right now. They're not in the classroom. I've heard teachers say that teaching remotely with these students is much exhausting and time-consuming than being in the classroom. And so I think that people are looking at the teachers and saying, you're still producing a wonderful result for the salary. I would say for our citizens that it would be really a neat thing to consider, and you could be part of that, but just to let the citizens know that even though our buildings may be closed and we're not able to come in and see, get our service met physically, that just to kind of give a snapshot into what's really happening behind the scenes with our city employees, and let them know that they're there, and I just think that would be a positive message to our people.
I think that I appreciate those comments. I can just tell you from our finance staff office position, I would say at least 60% of the 30 that are engaged in the finance department are working from home presently. And we have used a lot of web-based technologies to help facilitate that and have been quite productive. As you can see, we haven't missed a beat in terms of providing the financial documentation to the city. There has been a lot of stress and additional work responsibility on our purchasing staff alone, attempting to keep up with the purchasing needs of our city
Sean?
related to the pandemic
Sean?
response. Yes.
And let me, we're dropping the word that you're saying,
Okay.
unfortunately.
Does this help a little bit? I'm going to move the mic closer.
Better.
Can you hear that?
Yes.
That's better. Okay. So I was just saying from our, I can talk about the finance department. You know, we've had % of our staff, I would say at least 60% working from home every single day, and they're continuing to be able to perform many of the duties. Certainly, it may not be always the most environment. I think people like to be with their colleagues, and you like to have all of your resources available to you, but it has worked pretty well for us overall. I would have even realigned several of our parking staff who are now being realigned to the Parks and Rec department to help fill staff. So as we've seen parking patrol needs decrease over this time period, we have worked proactively to realign them to other areas of the city where their services are needed. So I think we are doing overall from a city perspective, adapt as best can be.
Any other counselors or have questions for Director Pritchett? Oh, yes, Counselor.
I did. Thank you, Mr. Chair. The couple of things. The one at the beginning that always surprises me when we talk about the bank income, is that do we receive that once a year, or is that out of the quarter? How does that, it's such a hard thing to forecast because we have nothing to go on, and an extra $1 million basically is good news, but I'm sure that industry, like the rest, are gonna struggle. So does that meet our budget for the year, I guess, is the question that I'm asking?
I believe most of that does come in the early part of the year, and it is related to, I believe, large part to profitability from last year and so forth. So that is it is highly variable and difficult to predict. So we do take a conservative stand budgeting. It's not a huge line item in terms of a revenue source within our budget, but in these times, certainly the extra $1.3 million is helpful.
The other thing that I wanted to take a look at, because I think that as we look at the future, are we still proceeding forward with the quality of life bonding with the River Greenway and then the police and fire training center? Or what are you predicting, you know, the availability to be able to go out for that type of bonding?
So we are proceeding. We're still awaiting the final design for the public safety facility, so we have an idea of what those what that total project cost would be, along with the PSAP or the Metro 911 facility that has been added to that. And the same is true with the River Greenway project. We are continuing to wait for the cost estimates to come in. I still would expect that we would move forward with the public safety and River Greenway, I guess what we term the Community One bond, later in the year. We did see the municipal bond market have a lot of volatility over a couple of weeks, but that seems to have settled down, and we're actually seeing some very low rates in regard to what municipal bonds are going, especially for high quality bonds like the Sioux Falls would issue. So there's still this is actually still a very opportune moment, and would be an opportunity to refinance a couple of bonds as well. Part of that, some of our existing bonds, as we had talked about previously, would likely be included in that and refunded and refinanced as part of this, where we could take advantage of lower interest rates. But that likely wouldn't be coming to council until I would estimate not till mid or late summer.
I always appreciate how you can handle these questions when we bounce from topic to topic, but one of the other things I was looking at was, do we have any predictions, because the state has told us that they're not going to help us with an isolation center or moving forward with some of that. Is there some early cost estimates of what we're looking at to take that on?
I appreciate that question. It's actually a very helpful one because I kind of skipped over this topic a little bit. But we're expecting some additional funds to be coming in. For example, we were allocated about $600,000 from as part of some of the federal legislation through the Community Development Block Grant Program. So we're one of two communities that receive funding directly through in South Dakota that receive direct funds through the Community Development Block Grant Program. The rest of the funding goes to the state to distribution for the other communities. But we received $600,000 for that. and we are in the process of developing what those funds would be used for. But one of those possibilities is to help stand up some of those isolation facilities. In addition, our housing department has actually applied for a grant of more than $400,000 from the state of South Dakota through an additional program that has come out from some federal funding, I believe. And that funding would be able for dedicating toward that purpose as well. So I would expect that we will be coming back to you in probably not the too distant future with additional appropriation requests, because we will need to appropriate those funds once they're fully known how they can be utilized. But those will help to stand up those type of facilities. In addition to the fact that if not utilizing those funds, FEMA reimbursement would be the key. But right now, we're looking to hopefully get 100% of that reversed through a combination of the ESG grant that we've applied for through the state, as well as the community development block grant dollars that we've received. The other one that I think is noteworthy, we have had some additional grants come through for public health to assist in some of the additional COVID-related response. A small grant for the police department as well. But one that is very noteworthy is $7.7 million allocation to our transit department. And we are working through the details of what it will look like. But that's a really significant opportunity because from my understanding, we won't need to match those funds like we have in the past for capital expenditures or for even some operating expenditures that are COVID related. That funding could be utilized 100% for some of those expenditures. That is a significant amount of money and is something that we will probably be drawing on over several years in regard to transit.
That's money we've received, or we've been awarded a grant, or it's something we applied for?
We've been allocated the funds, so it was allocated for each of the different municipalities, and we received an allocation of $7.7 million, and we're working through the details of how what those funds can be utilized for and how we draw them down and over what period. So there's going to be more to come on that.
Perfect. And as I bounce all over the place, one more. Are we still on track for opening the downtown parking ramp in June? And how are we forecasting out, some of the contracts or the leases that we were trying to sell? Are we where we need to be in getting those leases signed?
So the key thing with the parking ramp is, the way we viewed that from a financial perspective is that we weren't looking to support it through a large increase in leases. The hope over the long term is obviously yes, but it will relieve some pressure that we've had at some of our other parking ramps. I learned today that we were originally anticipating a mid-June timeframe for opening it. We are now presently looking at a mid-July opening for that ramp. Part of it has to do with the delay of an elevator getting delivery. Things are slowing down as a result of the COVID epidemic. It's not something that's under really local control necessarily, but even certain orders that we've had are getting delayed as different plants are shutting down. So we looked at that would probably be more of a July opening for that parking ramp, and that's the last indication that we've received. We do continue to stress test our parking fund and watch that one very closely, as I talked about a couple of weeks ago. Overall, in terms of parking leases, I think we've probably seen of the probably 2,300 leases that we've had. We have had several customers that have kind of set aside their parking leases at this time, about 300 or so, but we've also sold about 40 more leases. And so net, we're down probably about 10%, and that's all been taken into account as we continue to stress test the parking fund. But we feel pretty comfortable with where our numbers are at right now. We'll just see how long this sustains it. The one thing, again, they are month-to-month leases, and so our users of our parking ramps do have the opportunity to cease using them. But the one risk that they do take is that many of them have waited years to get into certain ramps. And when they do release their leases, we can't hold them to those spaces going forward. So when they come back, if there is still availability within a particular ramp, we would sell leases back again based on that. But it might shift depending on where the demand is. And so that's why many of our customers who may have fewer workers working downtown right now are maintaining many of their leases in order to preserve the positions they have in certain ramps.
Well, I guess to follow that up a little bit, I think that's exactly what the person from the email sent to me, at least, was saying they don't want to lose their parking spots, but they're taking a big hit by not being open and having people work remotely, and they're looking for a way to mitigate some of their costs in this uncertain time, but not give up the ability to keep the spots that they have. Much smaller than what you were talking about in total numbers, I believe, but I responded by telling them I don't think we're in a financial position where we can, with the parking fund being separate or an enterprise fund, that we have that ability to forgive leases at this point. We're going to be really tight with keeping that system going to make those needs. So that was how I answered the question for the resident. That's it for me.
I think that's fair, and I think in addition to that, certainly, if somebody takes their lease and they choose not to renew it on a month-to-month basis, they have to make a business decision on their end, and we're operating that like an enterprise fund, and we have to make business decisions on our end. So those spaces may be available in a month or two when they'd like to pull the leases back in, or they may not. If there are additional individuals, and we have had additional individuals that are looking to lease those spaces, we just have a responsibility from a business perspective that we want to have as many leases generating revenue as possible.
Any other questions? Councilor Neitzer.
Director, if somebody gets allocated, let's say from libraries over to parks, during the time that they're working over there, is their wages charged to the new business unit?
So a couple of pieces for that. So say with our parking, our fund, that's an enterprise fund, so it's fully separate. And so from that respect, when we've had several individuals go from being within parking to working for parks, we are reallocating those dollars over to the parks department. But if it's from two different departments, say it's somebody coming from libraries and they're going to parks, we're not moving that reallocation from that perspective, because we know at some point in time they're going to come back to libraries. And we also know that they're both funded by the same general fund. And so just to maintain some consistency in their budgets from year to year, if those positions are general fund or within the general fund, we aren't moving them between departments.
Okay. As it relates to property tax, I was thinking about this, and I've been asked about that. As you know, people are, particularly commercial property owners, are staring down having to make their property tax payment. As you know, we received a lot of requests for some sort of abatement or delay, which we don't have the power to do. But I was thinking about whether there is a risk of some late payments, and I'm curious what you think about that. But I'll tell you, as I thought about it, maybe you can tell me whether you agree or not. Obviously, anybody with a residential mortgage, almost without question, is going to be escrowing because their lender is going to make them do it. So there's probably very little risk there. And then I'm not sure how it works on the commercial end, but at least if you're going to pay anything first, it's probably the property tax, because the county could come and take your property if you don't. But what do you think about the possibility of a large amount of non-payment and delayed payment of our property tax?
We're certainly cognizant of that fact that could occur, and certainly different positions and different businesses and different positions are gonna look at this differently as well, in terms of where their cash flow is, because they might decide they're gonna make their payment in October or something. It's not as typical on the commercial side for the property taxes to be escrowed when they have commercial mortgages and so forth. It depends. It varies from bank to bank. Some do and some don't. But I will tell you, they will check for that on an annualized basis when they do their reviews to ensure that those property taxes are being paid, because it does jeopardize the position of their collateral. And so they do make efforts from a banking perspective that they continue to monitor that, but certainly not to the extent that you would have on the residential side.
Okay. And then did you say you projected a 30% annualized drop in the entertainment tax?
We're buffering against what a 30% drop in sales taxes on an annualized basis would look like. And keep in mind, we were up, over 5, I think it was 5.6% year to date for the entertainment tax fund. So we're starting in a good position. Mm-hmm. So a 30% reduction on an annualized basis is a much deeper cut during the hard summer months that we would expect those revenues to be the lowest, to probably achieve their lowest point before they start kind of growing back as the economy starts to normalize. But again, predicting when that occurs is challenging as circumstances continue to change externally. But those would be more significant cuts or reductions in sales taxes than we probably would have ever seen. So we're taking a conservative approach, but we don't want to be too conservative that we're holding back too much funds, because every time when the city does invest and makes the right investments in the community, that dollar turns over several times and it means additional dollars and jobs for the community as well.
Well, as you know, we do have at least flexibility in that we don't have debt service in that fund. Do you know how deep of a drop that we could potentially see, factoring in the good performance we had in the first quarter? That 30% takes in? Is it 50%? Is it? So,
a 30% could equate to a 50% or more drop for 3 to 4 months during the next, you could say during a May, June, July, August type of sales tax receipts that are coming in and then starting to work its way out for the end of the year. So that's the way we've kind of looked at it, and we'll continue to adapt and reassess that model as we have more information.
Yeah, obviously this could be severe in multiple funds, but as I was thinking about this fund, you've got the restaurant sector, which, that's been just absolutely shattered. I was reading a industry report that said that they were saying that sit-down restaurants are probably down 80, 90%, and fast food is down 50%. That's nationwide. And then, of course, we have no heads and beds. The alcohol sales, at least the on sale, has got to be down dramatically. Yeah, maybe it's made up by some. Maybe there's some off sales. I don't know. But all of those different sectors is what plays into the entertainment tax. So I could see maybe the entertainment tax taking one of the largest hits. And I don't know if you have any comment, but.
I agree with that, and as we looked at the sectors, I think, and I'm recalling back to my previous presentation, but we kind of looked at upwards of 85% of the sales tax base for the entertainment tax is from industries that we believe to be significantly hit as a result of this. So and a large part of that is lodging, restaurants being a larger part, and bars and liquor sales, and then lodging after that. So that is the number one piece. I would say what is going to be even most impact is going to be the lodging taxes and the bid taxes. And as a city government, that doesn't affect us as much because those funds are essentially passed through to the CBB. But it will be a significant challenge for them for sure.
Yeah, absolutely. And of course, I left out another one, which is our entertainment venues, private and public. Most of them are idled, so it's a tough time. Thank you.
Any other questions? Councilor Staley.
Sean, not to put you on the spot, but I'm going to do it anyway. Councilor Starr talked about the isolation center. You're talking about getting some grant money. Is that looking like using hotels or getting some kind of a event center set up? Or what are you thinking about?
I think the specifics are still coming together, so I hesitate to give too many comments on that. They continue to work through that here, but I expect that'll probably become hopefully something that comes together over the next several days and weeks.
And please keep us updated on that. Sean?
I would say that, the one thing is that's primarily a question that could be posed to the EOC rather than to me. They would be in a much better position to answer that question.
Thank you.
All right. Anybody else? Anybody on the phones with anything before we move on? All right. Looks like we're good to go. Thanks, Director Pritchett, for being our initial presenter down there from the bunker and working with us through the kinks. So we'll improve from here.
All right.
Thank you.
Thank you very much. Yep.
Mr. Chair,
Yes.
if you can log out of that session, please.
You good? Okay. All right. Next, we've got the CARES Act by Bob Munt and Dave Rosenboom. Come on up when you're ready.
Welcome. Thank you, Mayor Pro Tem. and council members, thanks for having me. As you mentioned, my name is Bob Munn. I'm the president and CEO of the Sioux Falls Development Foundation, and it's really my pleasure to be here today, mostly because I actually get to see you guys in person, so it's kind of a good thing to be able to be here, so thanks for that. First and foremost, I want to thank all of you for your leadership here as city councilors and the mayor, and the role that you're taking in leading this city through a very, very difficult time. Unprecedented, that term has been overused, but it's understated. It's just a time that none of us ever thought that we would have. I want to thank Councilor Staley for inviting us to be here today and kind of talk to you a little bit about some of the things that we're doing for the business community. So before I do that, though, I've said this so many times in the conversations that I've had, is that I strongly believe that we are Sioux Falls and that we're going to get through this. And as one Sioux Falls, we're going to power through it. We're going to find solutions, and we've done that with so many other things in our history. This shouldn't be any different, and we're going to make this thing work. And I know that with leadership like you guys have, we're going to get through this. So there's no doubt also that the business community is hurting and also adapting to this environment. In most cases, people want to get back to work, and those employers want to get them back to work. And so they're doing everything they can in their power to work with CDC, to work with you all to make that happen. So again, consider us in the business community your partner in that. In fact, our ongoing surveys of these industries indicate that manufacturing companies are operating close to normal as far as their day-to-day operations go, some with reduced capacity, but certainly supply chains for the most part are staying pretty consistent with the exception of some of the imports and exports. Those are way down in many cases. So a lot of our companies that are working with imports and exports are having a few more challenges than the others. With most of these employers, they are actually trying to hire people. They are not laying off. They're feeling the pain of increased employee absenteeism due to fear, caring for a loved one, taking care of children, all the great reasons that employees will stay at home and not come to work. Certainly, they're staying within the guidelines, again, set by all of you in the CDC, and they're expecting their employees' decisions to stay home and not come to work. So, again, trying to cooperate with that as well. However, the foundation and our partners recognized early on that we have to have something to provide support and guidance and resources for the business community. And so we developed some local programs and partnered with the state and federal resources to promote some of these. So I think I've got this on the screen. So Opportunity Sioux Falls is a website that we came up with. It's an online resource developed for both employers and for who are looking for workers and workers looking for work. So it creates that connection between the two. It provides a listing for those companies looking to hire with contact information for those employers, and it also links to employment agencies as well as additional job sites in the area, including Kello, the Argus, and many others. In addition, it lists resources with SBA, GOED, Chamber, and others partners that we have in the area. Another website that the Chamber has produced is called supportsiouxfalls.biz. It's a website, an online resource for businesses and the general public, connecting them to restaurants, retailers, service businesses who are open for business and providing pickup, curbside, delivery, or online shopping opportunities. The site also connects businesses and citizens with assistance sources and the community, and the state provides those daily updates to that website as well. So those are all great opportunities to get engaged, to get involved, and to get our citizens involved as well. Several financial assistance programs have also been implemented, including Governor Noem's Small Business Assistance Fund, where businesses can apply to the state for financial loans. The Downtown Sioux Falls organization has a financial assistance program that's up and running as well. And then lastly, certainly not least, some of the state and federal programs that are running. The biggest one in the last couple of weeks has been the Payroll Protection Program, or PPP, as a lot of people refer to that as. And without a doubt, our banks have really stepped up to the call here. With me today, as I mentioned, is Dave Rosenboom, and he's really been at the forefront of this program, along with all the other banks and lending institutions in town. And I'm going to turn this over to Dave so we can talk a little bit about the overview of the program, what it's meant to Sioux Falls, some of the participation that has taken place, for Sioux Falls and for South Dakota, and also maybe give us a little snapshot of what might still be to come, pending some of the legislation that's before Congress and our senators right now. So, Dave?
Thank you, Bob. Welcome, Dave.
Good afternoon, councilors. My name is Dave Rosenboom. I'm president of First Premier Bank, and thought I would just provide a bit of an overview of the Paycheck Protection Program. Maybe a little context is a good place to start. When we had the Great Recession back in 08, 09, and in 2010, one of the things we learned from that was that it took about 10 years from the point of the Great Recession to recover all of the jobs and to return to what we call full employment in our economy. And so the economic powers that be in our country recognized that anything we could do this time around to provide stimulus more and faster was better. And in particular, stimulus that would keep employers connected to their employees and vice versa, employees with their employers. Because if you go to the unemployment line, then returning back to full employment just takes longer from a hiring, from a training, and the recovery just takes longer to take root. So that was the big picture, the context for why Congress did what they did with the Paycheck Protection Program. So that program was an effort by Congress to allocate $349 billion of funding that was intended to go to the small businesses and nonprofit organizations around the country for the express purpose of retaining or rehiring their employees. And so that $349 billion was, again, appropriated by Congress. But how do you get it in the hands of the small businesses and the nonprofit organizations in our communities? And that was the challenge that we all faced. What Congress decided to do was to create a forgivable loan program and use the financial institutions around the country to be the delivery channel for that $349 billion. The challenge was doing it quickly so that you could provide employers with that funding to be able to allow them to make good decisions on retaining their workforce. And so President Trump signed the CARES Act into law on March 27. By April 3, it was up to us as banks to be ready to catch the proverbial ball that Congress threw at us and deliver it to the small business and nonprofits. So you have Congress over here with $349 billion. You have the nonprofit organizations and small businesses that need it, and you had 5,000 banks in the country or financial institutions that were the delivery mechanism. So we had to catch that fastball, turn it around, and deliver it. And I think all told, it was an amazing team effort by all involved. So I just want to give you some perspective. In South Dakota, I provided, if we could go to the sheet that would look, it'd be another, there we go, right there, that's perfect. So what you'll see highlighted in yellow is that 11,324 PPP loans were approved in South Dakota. And to the right of that, you'll see it was just a little short of $1.4 billion of those loans that were made. And I think what's really important to recognize is that a company did a study to say what percent of the eligible payroll for small businesses were met in each state. And what you would find is that South Dakota ranked 5 out of 51, and 77.7% of the eligible payroll that could be counted toward this program was utilized in South Dakota. If you look at this, the highest state was Nebraska at 80.7%. The lowest state was the District of Columbia at 30.4%, and California was at 37.9%. And so what you find is that the small businesses and nonprofits of our communities had excellent relationships with their financial institutions, which allowed them to access this funding in a great way and in a distinctive way. If we could go back to the map, I'll just show what it looks like. You see that the relationships that those organizations had with their institution, the dark blue are the states that performed the best in terms of eligible payroll. You see South Dakota there at 78%. And as you get further to the coast, where some of those relationships might be more electronic than personal, didn't perform nearly as well in meeting the needs of those small businesses. So a lot to be proud of to be in the Midwest, a lot to be proud of to be in South Dakota. Again, I think this program provided an exceptional bridge for those small businesses. Not that it solved all the challenges or the issues they're facing, but it allowed them to have peace of mind to know that there was funding for their payroll for at least an 8-week period of time. And so with that, I'll just perhaps open it up to any questions you might have.
All right, thank you for the presentation. Councilor's question, Councilor Neitzer?
First of all, thank you for what you and all of your partners have done. It's really a good news story to see such a dark color here versus other states. We were talking about this a little bit, and this is something that gives a lifeline where I think a lot of businesses would be gone already without this. Now, that being said, I have taken a number of calls, and I've gone personally to a number of businesses because they wanted to talk me through it, and they've even showed me the balance sheets and things like that. And as you know, nothing is perfect. This is providing them a bridge to just, for many of them, it's just they're barely holding on, because as you know, they have to use the vast majority of this towards payroll, and they still have fixed expenses. And when they're only doing a couple $100 of revenue a day, they still have to pay their mortgage. They still have a $12,000 property tax payment at the end of the month they have to make. And one of the things that they talked to me about was that with me open, I'm at least getting a little bit of revenue, and I can just barely squeak by. If you shut me down, I'm done. You know, and one of the other things, and I don't know how much, I'm assuming you guys have all looked through this with a fine-tooth comb. One of the other things that they have to deal with is the fact that there's requirements, and maybe you could talk about it a little bit as far as what the employment that you have to maintain. And I understand there's a couple different things that go into it, which is the full-time equivalents. You got to calculate that, and you have to keep a certain percentage of that, and you have to keep the hours. So if one person leaves for any reason and goes to the unemployment line, you got to hire somebody else. You have to give somebody else more hours, and to the extent you don't maintain it, it turns into a loan, which they're scared to death about because they don't know when revenue is going to start coming back in. So maybe if you could talk about a few of the rules that have to do with the maintenance of your payroll.
Yep. So these loans are 100% forgivable. That doesn't mean they will all be forgiven. And the business needs to maintain their payroll and maintain their employment levels. And there's a couple of different formulas that they can use to demonstrate that. I think the good news is that all of the money was made up front in the loan. And so they have the cash set aside in an account or in their operating fund. And to the extent they maintain payroll, that money is going to go out to fund that payroll. But if they lose an employee or two or three, then they won't have that outflow going out, and the dollars are still here to repay the loan. So yes, it's true that, for instance, if a small business starts with 20 employees, their 8-week period, and they end with 18, that would be a 10% reduction in payroll or FTE, and it would be a corresponding 10% reduction in the forgivable portion of their loan. It would be 90% forgiven instead of 100% forgiven. But they should still have the cash that they didn't use to pay those two people, that they can use then to repay their loan. So I think the economics actually work out one way or the other, and that's a bit how it works.
True. The only thing, of course, is they've got their burn rate of how fast they're burning through their cash just in general if things don't turn back around. And then as far as paying it back? And what are the terms? When does, let's say to the extent you do not, it turns into a loan, when do payments start and what are the loan terms?
Yeah, so loan terms are a 2-year maturity. It's a 1% fixed rate of interest. Most lenders there's no payments due for 6 months, and then the full balance is amortized over the next 18 months is what I've seen most common. And again, to the extent they have it fully forgiven, there'll be no payments due. If they have it 90% forgiven, there'll be payments on that remaining 10%.
And okay, that's very good. And then finally, what is the maximum that somebody can receive, and what is the ceiling at which I'm no longer quote unquote a small business and I don't qualify?
Yep. Could have gone into a lot of detail, chose not to. Generally speaking, if you have 500 employees or fewer, you're eligible, whether you're a nonprofit or a for-profit business. There are other rules that allow sometimes more employees, but generally speaking, that's the best way to look at it.
And then is there an actual dollar cap, or does it have to do with the number of employees?
It's based on your average monthly payroll for 2019. And you divide your average monthly payroll, including all your benefit costs, by 12. So it's 1 month's worth of payroll times 2.5. So if your payroll is $1.2 million, your average monthly is $100,000, you would be eligible for $250,000 loan.
Okay.
And that would allow you to make 8 weeks of payroll, plus have $50,000 you could use for other eligible costs like rent, mortgage interest, or interest in general, utilities, and those types of things. So there is something in it for small businesses above just payroll.
Okay, very good. And the last thing I'll share, and my only point, it's not to rain on this parade because this is important, but I'm just trying to get across just how severe of a situation this is, because I really think it's important, is some of the businesses I've talked to are seasonal, and this is their season. And so even if things start up in a month or two, they're probably gonna be gone, or they're gonna struggle mightily because their entire year is made sometimes in a 1 or 2 month period. And the rest of the year, they're basically just using that cash. And if they don't have that, and so that has to do with hardware stores and garden stores and certain other seasonal things, so.
I think it's important to recognize the Paycheck Protection Program, for its name, is a paycheck protection program. It's intended to be more of a substitute for laying somebody off and having them go into unemployment, as opposed to providing funding for the business to make it through a tough time.
And that's a very good point. Getting somebody on the unemployment line, like I said, it takes years for that for business and for those employees to get back on their feet, and this may shorten that window, and that's the hope.
And I think also to allow, as I mentioned earlier, recovery to happen sooner. If you don't have to hire new employees and train them, if you can retain them, the chances are you'll be off to a running start when the economy turns.
Councilor Sale.
Thank you. Thank you, Dave, for your presentation. My question is, if a company, a small business, let's say it's Kurt's Repair Shop, and it's really, really hard and I can't see the end, and after 8 weeks, I go bankrupt anyway, I close my doors, is that, and then I have to repay the loan on top of that?
To the extent you've maintained your employees through that, then that portion would be forgiven. And there'd be no reason not to pay your employees. In other words, the individual business owner controls how much will be forgiven. If they follow the requirements of the program, they'll have literally 100% of the loan and interest forgiven. So it doesn't, yeah, it shouldn't be a loan on top of.
Okay.
Yep. But they have to maintain their employment level.
For those 8 weeks?
Yeah, but they have the money to do it.
Correct.
With the loan. So if you use the loan for its intended purpose, you have the funding to maintain employment. That's the design of the program, irrespective or regardless of what happens with your business aside from that.
Thank you.
Councilor Stanley?
First of all, Bob and Dave, thank you for coming in, because this was floating around out there and I didn't understand how this was working. So you're answering some of my questions. First of all, I saw online last night that a bank, a nationally recognized bank, is getting sued because they were apparently giving some of this money to companies that were too big. Have you heard about that?
I did hear about it. I'm not in a position to comment on it.
So apparently, anytime you have huge amounts of government money coming out, as Councilor Brecky, are you there, Brecky? Is she online with us?
She is.
She made the comment, there's always going to be heroes and scoundrels, you know, when you come out of a kind of a pandemic thing. So we've got this situation where maybe there's some fuzziness as to how big of a company can receive funds. I've heard that now it has run out, right? There's no more money in the fund.
So the fund ran out of the $349 billion exhausted on April 16. The Senate just passed. Now that needs to be signed into law yet, but the Senate just passed, I think, another $320 billion for the program. So
And there's no limit. So we can tell the public that 11,324 businesses have been helped with this.
in South Dakota.
Fabulous. And
is.
now we could have another 11,000 helped.
I think what you'll find is, according to the map, a lot of businesses in South Dakota reacted quickly. Their lenders approved them and processed their loans quickly, and so we were more effective. I don't know the provisions of the new legislation, whether you'll be able to get a second loan for an additional 8 weeks, or if this will just be one loan, one time, if that makes sense.
Yes, so in that 8 weeks started back on, when did you say that this April?
Your 8 weeks starts the day you receive the loan proceeds.
So the first time our people in South Dakota would have received that would have been?
April 3 would have been the earliest day.
So they've got another month. It'll take them through another month at least, until the end of May. What percentage, I have to ask this question, I'm sorry, what percentage is the bank getting for handling these?
So it's a 1% loan, and we use our money to fund the loans, or deposit money to fund the loans. And if it's over boy, now you're asking me to go off the top of my head, but I think it's from 0 to 350,000, it's 5%, and from 350,000 to 2 million, I think it's 3%, and anything over, a loan over 2 million is 1%.
Okay, and then this would also be including for the employees, the benefits and salary?
Salary, benefits, yeah, all their payroll costs, correct.
And then have you found do you guys track this after that, or does that totally go back to the federal government?
So I think to answer or to address your first question, this is a deal between the small business and the federal government. And so the application has certifications that the business makes, that A, they're eligible, and B, that they, again, there's 6 or so certifications they make. The federal government, through that process, has a very strong arm ability to make sure that only people that are eligible apply, and if you weren't eligible, that will be clawed back. So the certifications are steep, and they are required that the business owner accept that responsibility.
But so once you've given the loan, though, it's between you, so you're saying the bank, it wouldn't be a loan with the bank? You're just the middleman, and then
We're the conduit. It is a loan with us, but you certify to the federal government to have your loan be forgiven. You've got to meet those requirements, including being eligible in the first place.
So you would never go after the business owner?
Thank you. That you made the perfect distinction. That would be the responsibility of the federal government.
And are the people who have been recipients of this, is that public information?
Yes.
Where would you find that?
So if you go on treasury.gov and go on the coronavirus red banner across the top, it will it'll take you to the links of all the programs, or all of the details of the program, including the borrower application form, which I think would be great to look at.
So so if we want to tell people coming out of the gate now, because it sounded to me like before there was like a wild stampede of people trying to get into their banks, and some people are saying, well, we didn't make it, the gate closed.
Yeah.
And they didn't get it. So I'm hoping, I think it would be a wonderful thing if we opened this up for other people, new people to come on board.
If I could give a frame of reference there. There were 11,000, I think the number's 324 loans granted. South Dakota Bankers Association did a survey of their member banks after and found out that there were 1,500 loans that were at some degree in process that didn't get done in time. So 11,000 done, 1,500 not. So you asked if there will be a big rush or big stampede. There will be, but not maybe to the same extent.
But it'd be nice if, how will people know this is coming? Because I would like on Facebook to give people a heads up.
Right.
I mean, should I say that now? Watch the media,
Watch the national news. Yeah. Treasury.gov is a great resource. Or talk to your bank. I mean, that's the delivery mechanism.
But are you saying by the time it hits our local news, it might be too late?
No. No, I don't think it'll be too late. But I would say our businesses need to react timely. It's their responsibility to apply.
I'll give them a heads up. Thank you.
Thank you.
Other questions? Anybody on the phones have questions? Quiet on the phones today, and everybody else is good? Okay, well, I sure appreciate your roles that you guys have taken in getting the funds out quickly. Like you said, would you have to have it pretty much experts on the program and get things moving within a week of having it approved?
We have 370 employees, and 80 of them played a role in delivering this. And the SBA said they did 14 years worth of loans in 14 days.
Amazing.
As a frame of reference.
Have you, and I don't think this is a local problem, but I was reading today, I know they've got the 500 employee kind of cutoff where you can apply. And did I see a couple companies that were over that had applied and gotten funds, but now they're giving it back, and some are applying that aren't supposed, I mean, I'm not trying to say there's any.
So the general rule is 500 employees, right. But there's an affiliation rule. If you're affiliated with a franchise, that you could use your employee count based on per location as opposed to in aggregate. Okay. And keep in mind, those companies, let's not be too quick to vilify them. The money is, they can only use it for payroll of keeping employees employed. So an employee of a larger company is just as precious as an employee of a smaller company. Mm-hmm. So that's where the money is going. Businesses have to make their own decisions whether to apply if they're eligible.
Yeah, I figured there's probably a good explanation for it, so. Yeah. Right.
Yeah.
All right.
Can I ask one more thing? So what would differentiate between a company that maybe they're having their employees go satelliting online, and they could, how does the company show the hardship? Does it have to be 100%, or could it, because, so you could have a company that's viable, but maybe they've had, their ability to sell the product has been reduced, but they're still able to do something.
Yeah.
And then they get this money in that makes them whole.
There's no means testing, so it is available for any organization that says the economic uncertainty creates a justification for them to apply, and that's their certification.
So they could take the normal payroll money and use that to pay for their overhead then?
Yes, exactly. And I think that's an important recognition. That money that otherwise would have been used for payroll, now they have this funding for that.
Mm-hmm.
Again, if you're a restaurant, it might be small solace. If you're a manufacturing company, it might be excellent, and everything in between.
All right, thanks so much. Really appreciate you coming in today.
Okay.
All right, thank you. We'll move on if there's any public input on any of the items discussed today. I don't see anybody coming, so we will adjourn and be back at 7. Thank you.